Hello, my name is Tim McCracken, founder and CEO of Crypto Academy World. And in today's workshop, we're going to talk about how you can create and own your own crypto hedge fund. And it's not as onerous or as expensive as you think it might sound. My journey first started out as a tradie. I got taught very simplistically, measure twice, cut once, mistakes cost, completed a couple of university degrees, postgraduate degrees in real estate development and valuation. Then moved to Australia, did real estate finance and a lot of professional qualifications along the way, including RG 146, as I was working on the Chicago Mercantile Exchange, trading and coaching NASDAQ futures. Was there when I got my introduction and skills about risk. And throughout all these journeys that I've been on, what I've learned along the way, I've taken and put it together to come up to where we are now with Crypto Academy World, and especially with our hedge fund. Now, what I'm going to do, I'm just going to stop sharing. A bit of a personal chat like this. People think this is a very, very expensive exercise, and it's not. First of all, what you've got to understand and appreciate is that crypto is a very volatile asset. It's all about risk management. And that's what hedge funds are. That's when they were first created. They were developed to manage an offset risk. Now, when you develop an offset risk, what happens is that the upside takes care of itself. You eliminate or minimize that downside, you're going to have strong profitability coming through. So what I'm going to do, I'm just going to reshare my screen and we're going to move forward and discuss what we're going to do today. Now, here we go, all sorted. And I will get rid of this. It's very, very informal today. Usually it's really, really organized. Okay, and we get out of there. What I'm going to do now is I'm going to actually take you into our back end. And what we're looking at here is, in fact, our hedge fund and mastery dashboard. So this is all about risk management. Now, if we look to our left here, you'll see that we've got in the portfolio structures, we have anchors, growth, risk and return, and then quantum. Now, what we do is we apportion our capital in accordance to that risk. Again, managing that risk. For example, you don't go and put a bulk of your capital, of your anchors, into high risk assets. Likewise, we have our color-coded crypto signals. And as you can see here, you can see whether something's been overly bought or overly sold, okay? Again, managing our risk with our signals. There also too, understanding what we're investing. Everything's been rated, researched. Then we're looking at our multiplier, right? Looking for the certainty, looking for the outcome that we've got to do. And then when we add all that up together, we come through, we can measure and quantify as we go along the way, looking to achieve what we want to achieve. We're looking to achieve a multiplier of 14 on a capital of $50,000, which is $700,000 by the end of 2025. Now, with the hedge fund, this comes with a performance assurance. The performance assurance is 3x. So if you had $50,000 worth of capital here, we will then be working with you to get a minimum of 150,000. And as you can see here, with the highs and the lows, if for some reason the market pulls back, say for 3 months, we add that on to the 12 months. So it become a 15-month assurance. Now, what that means for you is that you can have certainty. You have certainty the surface is going to be there until you get the assured outcome that's promised. And one of the things in having a hedge fund is predictable, measurable outcomes, certainty, clarity, strategy, and risk management. Now, what we're going to do now is go ahead and have a look on the cash flow side. Now, on the cash flow side, we have our income. We call it Zen. How this works is we have a whole range of targets that we're working through. Over here, are we looking to create income? We're looking for an under a 50% return. Are we looking to create equity? 50 to 100%. Are we looking for exponential returns? Up to 200% or parabolic over 200%. Now, what we've developed over time, and I'll just briefly take you in to look at some of these systems. Here, what you can see in the beginning of August, and we record everything. Now, with this here, we do all the chart work. We do all the identifications of entry and exit points. And this goes on and on and on. And these are tools that we can assist you with if you want to go and have a look at building and creating your own hedge fund. Now, most importantly, unlike a lot of other organizations, we've identified that with cryptocurrency, people have a difficulty in putting and pushing the sell, taking profit. Hence what we've got here: target 1, target 2, target 3. Algorand, entry point, 55 cents, exit point, entry point, exit point, entry point, exit point. And this is what the targets are that we're looking to achieve. All measured, calculated. So when these transactions are put on, we actually have the sell limit orders put in place. Now, what that means is that you have certainty that over time, we're working towards those targets. You don't have to be sitting in front of your computer all the time. Now, you may want to cash these out a little bit earlier. That's fine. Or you might want to sit and let it go all the way through to fruition, or have some trailing sell limit orders coming behind. So we then go through, and what we do is we break down a summary of every month, and we have our tracking system. And as you can see here, different types of trades. We're looking at longer term trades. This here is the weekly time. How long have we been in those trades? This here, we're trading $500 or $1,000 at a time. We don't use leverage. And as you can see, we go through and we're looking here at a turnover of about $54,000 for an ROI of 30%. But that took about 4 months. So let's go and have a look at some shorter term targets, shall we? Let's just go in here and have a look in September. In September, what we're looking to do is turn the money over quickly. Notice the amount of yellows that we got here. You can see how we turn in 1 or 2 weeks, quickly, quickly, quickly. All the greens here being paid out. Now, what this equates to is a turnover, less turnover, okay, and more profit, right? Because it happened in 1 month. The 30% instead of taking 3 months has happened in 1 month. Likewise, when we go through here into October, very similar again, we're looking for short to medium term trades. And in these short to medium term trades, you can see a lot of greens and yellows, our targets. We're working certainty. Again, turnover, 33,000. Profit on $500 trades. Profit on $1,000 trades. We're looking again at an ROI of about 30% per month. That's the magic sweet spot. That's what we always work towards. The only thing is sometimes it can take a little bit longer because of the nature of the market. But there's nothing stopping you cashing these out and bringing the profit in quickly and doing it manually. So that's pretty much it for today. What I'm going to do now is just pop back up into here, up into here, and just explain very quickly how our programs work. Now, as you'll see here, the hedge fund is in the bottom left corner. If you're looking to get started and you're looking for consistent profitability, start with our foundation, okay? What that's going to do is get you in the rhythm of consistently getting consistent cash flow returns every month. Then if you want to, you can look at our income program, which is a passive or active income component to that. Those that are looking to master and get really, really good, looking for a game changer, we recommend Crypto Mastery. Now, hedge fund is actually a combination of income plus mastery to take you up and beyond where you thought was possible. So if you want to, you can pay in cryptocurrency, and that's fine as well. We also do have a split payment system that you can get you up and running and maybe pay the balance out of your profits. But that's something we can discuss in the future. So I've given you a really, really quick whirlwind tour today just to show you what we do at the back end. Creating your own hedge fund and managing your own hedge fund isn't that difficult when you've got someone to help you. So if you'd like more information, let's take a next step. Let's do a deep dive. Let's get right into the back end, take our time, go through Q&A, and just see if there's something that you feel that you can actually do. And if it is, we can talk about moving forward. Well, that's all from me today. Thanks a lot, everyone, and I hope you have a great weekend, and I look to speak and see you soon.